other funds which are equity oriented schemes can be growth oriented, which are not going to pay any dividend, but which will reinvest any earnings they have and try to increase your capital value. And then there are income schemes which will try to distribute the earnings uh, quarterly or annually. And then asset portfolios. So equity funds, debt funds is one asset-based funds. But if I want to have a fund which has a portfolio of equities, debts, and other asset classes, then I can look at hybrid funds, or I can go for alternative investment funds. And these funds will have multiple different types of assets within uh, their portfolio. And then there are thematic and solution-oriented funds like tax saving, retirement, child welfare, arbitrage. There are n number of categories, and they can be created. There are value funds. There are contra fund. There is financial services fund, and then there are exchange traded funds. Exchange traded funds are slightly different from other mutual funds. These are available on the exchange at any point of time for liquidation, and they can be actively and passively managed as well. So these funds are available usually as a stock. Just like you can buy buy the units in these funds, just like you buy equity stocks from the exchange and sell them right there itself. Then there are overseas funds. These are the funds which are going to invest in overseas assets, overseas securities, real estate, or other investment modes. And then there are fund of funds. Fund of funds are basically managing different other mutual funds, and they can have a lot of themes. One of the most common themes is gold and international fund of funds, which are going to invest in US or uh, European countries or NYSE and these kind of exchanges. They give you different exposures, and based on their asset class, what they are holding in their portfolio, you can determine risk in these funds. So what kind of asset class you can expect in a mutual fund portfolio is usually these. There can be others, but in India, most common asset classes are equity, debt, real estate, gold, other mutual funds, and commodities. So there are commodity oriented funds as well, and have you can invest in these funds which are managing commodity funds. Now, objective is one of the different unique things. If you can understand the mutual fund objective, it can give you a direction in which you need to look at to assess the mutual fund risk. So, if the fund is growth oriented, you know that if your investment horizon is 5 years, there is no cash flow as per from the fund. There is no automatic cash flow coming from the fund. You will be staying in the fund for 5 years, and it will give you capital appreciation. At the end of the 5 years, you should have a capital gain, substantial capital gain. Growth funds allow compounding growth to your money, because you are not withdrawing the funds. They are not distributing the earnings that they have. They are going to reinvest those earnings in the same similar securities they have been earning from. So the return from growth oriented funds is going to be completely linked to the securities that they are investing into. And then there are investment style funds with a different investment style. They follow that unique investment style. Some funds are contra funds. They are buying when the markets are trending downwards, and they are selling when the markets are trending upwards. And there are multiple similar investment strategies these funds can follow. So investment objective will define that strategy for you, so that you can for transparency purpose, that this is the way the fund is going to invest. And investment strategies obviously decide the overall risk profile of the fund. Income distribution funds are going to, you can say,